Hey, welcome to the video. My name is Joseph and I'm a consultant with Power Capital Solutions. And listen, today I want to cover a topic regarding hard money loans and how investors can utilize that in addition to unsecured funding. So first and foremost, as a real estate investor, why on earth would you utilize a hard money loan? Well, typically hard money loans are short-term in nature. Typically, you're going to see higher rates, anywhere between 8 to 12, sometimes even 15%. And the goal is to get a hard money loan so that you can close on a property, whether it's in distress, you get it from a wholesaler, whatever the case is. You're an investor, you get a property that's under market value, and you either fix it up and you rent it out, or you fix it up and the goal is to sell it as an exit strategy. But either way it goes, hard money loans are a fantastic way for an investor to get a property, get the funds to rehab it, and then sell it or rent it out as a potential buy and hold. Now, a common problem the real estate investors face when it comes to hard money loans is a lot of hard money lenders, they tend to require a certain amount of cash to close as well as cash reserves. So really what that means is a hard money lender, if they're going to give you the funds to acquire and rehab or renovate a property, they want to see that you also, number one, you have skin on the game to bring to the closing table, and then number two, they also want to see that you have liquidity, you have cash reserves, and typically that could be anywhere from 15, 20, maybe even sometimes 25, 30% of the total loan amount. So investors don't always have a lot of liquidity or cash on hand. Maybe it's tied up in other projects, or maybe you're just getting started and you don't have a whole lot of cash in your bank account right now. So one way that you can alleviate running into that hurdle is by getting some unsecured funding. Now, unsecured funding is, in a sense, kind of the opposite of what hard money loans are. So a hard money loan is a loan in which that property that you're going to be rehabbing, so you can either flip it or put a potential tenant in, is going to be utilized as an asset, as collateral. Whereas with unsecured funding, there is no collateral being pledged. So although the rates are similar to a hard money loan, the terms are typically longer. You're looking at anywhere from 3 to 7 years, no prepayment penalty, and you have a fixed rate in which you can actually pay that money back, and you can utilize that loan for gap funding, down payment assistance, or if the lender requires, potential cash reserves. So if you're trying to get into a deal and you need the purchase price covered, you need your rehab budget covered, and the lender still requires that you bring X amount of funds to the closing table, in addition to having X amount of funds in your bank account for cash reserves, an unsecured loan will satisfy that requirement. It will give you some capital to play with, and it will also allow you to be comfortable knowing you have the cash on hand if any unforeseen challenge arises. So with that being said, Power Capital Solutions provides unsecured funding for real estate investors for that exact reason. So if you need anywhere between $10,000 upwards to $400,000 in unsecured funding, make sure you click the link below in this video. So with that being said, if you are a serious investor and you're looking to do a lot of deals, or maybe you're trying to jump into your first deal, it makes a lot of sense to have unsecured funding in addition to getting a hard money loan. So all you have to do, click the link below of this video. Make sure you fill out our simple one-page form. Our processors will go look at your file, and within 24 hours we can let you know what your potential funding projection might be. So hopefully you found this video helpful. If you did, please like, share, comment, and happy real estate investing.